Dear Vice President Roschu, dear Professor von Hülle, dear Secretary General Juncker, dear President Marin, first of all, thank you much for the invitation to be here. Professor von Hülle already said, basically, by holding the EU presidency in the first half of 2019, Romania is during this month the center of the European Union. I'm happy that this is as well reflected during these days when Romania is as well the center of the European insurance industry. I would like to thank the organizers, Xprim, for the invitation, as already mentioned, all valuable efforts for the CE insurance markets and for organizing these days very important events here in Sinaia and in Bucharest. Thank you very much. Events, and this has to be clear, which bring CE insurance markets to the attention of a broader European public, bring all relevant stakeholders together and facilitate important dialogue and exchange. A dialogue and exchange which is necessary to assure that the insurance industry can fulfill its role for the positive development for our economies and for our societies. Having said this, I allow myself to present to you during the next 15 to 20 minutes the view of the Austrian-Insurance-Association BVO on some of the most important regulatory projects on European level during the next legislative period. This, as Professor von Hülle was already mentioned, will start next Sunday after the elections to the European Parliament and will last until 2014. I have to add that this view I will present is not only from the perspective of Austria, but I tried also to give an perspective for the broader CE region and insurers being active in this region. Here you see that I have chosen basically 9 topics which will be this outlook for the new legislative period. Unfortunately, I have to say that this doesn't reflect all the issues we have on the table right now. I think that we see in the last years there is a growing number of legislative projects insurers are confronted with. And this, I think I already have to start with, is actually a little bit already the first trend, which is from the insurer's perspective a little bit worrying. When I go now and start with the topics I would like to present to you, you will see here that the amount and the density of regulation is, in our opinion, disproportionate to the comparison of value added for consumers. Professor von Hülle was in this respect also mentioning basically the different approaches, the principle-based approach and the rule-based tradition basically we have here in Central and Eastern Europe, which in the end leads to a lot of rules for insurance companies. And this brings also, as Professor von Hülle was already mentioning, to the principle of proportionality, which is, in our assessment, not implemented in reality yet, but which should be in the next years. I would like to draw now your attention to one specific point, which basically refers to the Lamfalussy process. The Lamfalussy process is the EU legislative process. And there we had the experience with the implementation of the IDD and of PRIPS, where we saw there have been some difficulties in this process. And that's why we urge to have a standard implementation period of 1 year after level 1 and level 2 measures have been published and have entered into force, so that insurance companies have more time to thoroughly implement those rules. This is linked with a second experience we faced in the CE region when implementing the IDD, which was what we saw is that in different countries in the region, basically IDD was implemented at different points of time. Also here, I think we should be careful not to have a multi-speed Europe, but to stick to a common implementation of rules. I've mentioned now several times the IDD. The IDD, you see it here on the picture, I think we are somehow to find still the balance right in the middle of our not easy track. I'm confident that we will all manage to go through this journey, but I think looking at the review, which is planned now in the next years, I think we have to be careful that we have enough time for the adjustment to the existing rules. This is actually the plan also now for Solvency II, as Mr. Professor van Hulle was mentioning, and also for carefully evaluate the effects of the implementation. Evaluation of the effects I would also like to mention is that so far I think we can see a little bit of approach of everyone is dealing in a silo. And during the presentation of Professor van Hulle, I think you saw that there were many interlinks between different topics. And I think those interlinks have to be also thought about when evaluating the effects of regulation. However, about IDD, I'm sure there will be discussion. There will be also for sure a discussion coming again about the commission system. I would like to draw your attention that there are very important advantages of the commission system. One, I think, particularly in the C region, consumers expect an advice without costs. And in case, basically, they had to pay for advice, it would be expected that then there will be less or even no advice. And I think this cannot be, or this is at any means not the goal of the legislator. I also want to point at the fact that furthermore this could be also danger for social discrimination, as not everyone will be able to pay for this advice. And here again, a specificity of the C region, where I think we have a much lower average income and a much lower insurance penetration rate than in other European markets. The next issue is the pan-European pension product. Where do we stay now? Level 1 has been finished during the last month or weeks, and now we come about to finalize further details, and basically there are quite a lot of details which we implemented now in the level 2 measures starting from summer. In general, I want to give the message that the PEP must be a real long-term pension product to address basically the pension gap and also to deliver high value for savers. And we have to find workable solution for consumers and also for providers in this level 2 process. What we have identified, it's already one point when looking at the PEP kit. The kit is the key information document. There has been introduced kind of a cost cap of about 1%. And here we have to look very carefully to find the right definition, what is included in this gap, in order to make it possible that all providers can offer such a PEP, with the goal that there's a level playing field, not only between member states, but also with different providers on the market. The MID review, very important issue, Motor Insurance Directive in the C region. It's still, the parliament has already, the last parliament has formed its position. The council is still about to negotiate. I think this will continue this process, let's say at least for one more year. Looking at the C region, I want to point on two important topics. First of all, it's that if the minimum amount of cover will be harmonized, we have to be very careful on look very careful on the effects and not to create market disruption in form of sharp premium increases. I think it's very important for the MTPL markets in Central Eastern Europe, and in order to avoid this, to have a transitional period for, let's say, at least 3 years. Then there is a second issue, which I think particularly during the last month or years is in the attention on a broader European public. It's in the case of cross-border business and looking at guarantee funds, we have to see that the home member state principle, which is introduced in the existing Solvency II rules, should be respected and should be enforced also looking at the MID. This brings me also looking at guarantee funds and looking at cross-border business, brings me to two topics which will be very, very important topics during the next years. First of all, it's the insurance guarantee schemes, and meaning insurance guarantee schemes means an insurance undertaking doesn't exist anymore, basically, and the recovery and resolution, which means the insurance undertaking is still alive. And again, here I would like to refer to the importance of the home country principles laid down under Solvency II. If we look at any funds that will be established or are established or whatever, that the contribution or whatsoever should be risk-based, meaning that the insurance undertaking's risk should be taken into consideration. Another point is looking at those possible funds. We have to see that the own funds should be eligible also for solvency purposes. And here we have a situation in Austria where we have separated internal funds in the Solvency II regime, basically, and such a system is preferable and has much, much more advantages, I don't want to go into details, than any ex-ante financed pay boxes. Having mentioned the insurance guarantee schemes and recovery and resolution, I think Professor Van Hulle has also mentioned in his presentation, we just finished the ESA's review, which in my opinion, which a very good result with optimizing, which is what is already on the table. But I think the discussion who in the supervisory framework in Europe will have which power, this discussion will continue. And I want to give 3 important messages in this respect, particularly looking also at the CE area. First of all, we are in the region particularly that there are small and diversified markets which need a supervisor which is, of course, embedded in European structures. I think this is out of any discussion. But as well close to the local market specificities. Having such a European system of coherent insurance supervision, this means we need a strong role for the national supervisor and the colleges of supervisors to have an expertise realized about the local specificities. You see it with civil law, with pension system, with health systems whatsoever, and also to have a local accountability. And one important point is that we should be careful of having a blueprint of what we see already, let's say, in the banking union model. Here, if you would apply this, you will see that the NCAs, the national competent authorities of Czech Republic, Hungary, and Slovakia, would lose their grip on the markets, as they have, to the highest extent, insurance undertakings with mother companies from abroad. About Solvency II, I think after speaking after Professor Van Hulle, there is nothing to say. I think most even has been already said. However, I think I want to draw your attention that we should particularly have a special eye on those issues here and address the proportionality issue, very important for the CE region, for our markets. As already mentioned, I think we see, however, a high amount of documentation and reporting rules where we can ask if there is always the added value, if maybe sometimes we have identical content, and if it's maybe possible to simplify it. But I think here we have to enter into this dialogue to identify those issues and then to solve them. In general, of course, from the insurer's perspective, Solvency II, of course, is complex. And when I talk about conservative, then it means that we should still also look in the future to unlock the potential for insurance companies to support the real economy for growth, which is also very much linked to the housing issue. In Austria, insurers also are invested or financing social housing projects. And also herefore, I think there could be done something to foster these socially very beneficial activities. Talking about social housing, social activities, the role of insurers, this leads to the next point, which is, I think, the hot topic now and will be the hot topic in the next year on European level, not only European level. It's sustainable finance. However, at the moment, sustainable finance, is discussed more or less under the aspect of the environmental aspect. And I think here we should try to find also a balance to treat also the, let's say, social and governance aspect at the same effect. Talking about this, what are we doing now? Basically, we're searching for definitions, the definitions of terms, what is sustainable. And here it's important that this definition has to be done first before we start to think what an insurance company has to buy or not to buy, to which conditions or whatever. So taxonomy first. I was already mentioning that this is a possibility to lift or to deal with obstacles for long-term investment under the Solvency II and also under the accounting standards regime. And looking again at the C region, I think we have to be also careful and assess what would Brown punishing mean for insurers in the regions. What would be alternatives if certain investments are made difficult or are punished? And to see if there is a lack of alternatives in this field, particularly in the C region. Talking about sustainable finance and the climate change brings me already to the last issue I would raise. It's the insurance of natural catastrophes. This has been raised by Vice President Rochu, and here we have to see that the European Environment Agency has made an estimation that in Europe we have a protection gap of 400 billion euros per year. And in some member states, and particularly in the C region, we have economic losses of more than 90% which are uninsured. So our task has to be in the future to close this protection gap and to do more in the field of prevention. This can be done with a stronger political effort on EU level and also, of course, on national level, and we have to do everything to find appropriate insurance solution, again, on European and on national level. Ladies and gentlemen, the motto of this event today is back to Sinaia. I also personally, my motto of being here is back to Sinaia, because I have been here already some years ago on a private occasion. And at that time, I was walking a little bit or driving the car through the forests around here, Sinaia. And it happened that during one night, I saw 3 bears running around. So I was safe, it was fine. But somehow this gave me the, let's say, the inspiration to take also the example of this gentleman here and to present you 5 final conclusions. First of all, it's for regulation in the next years, we have to see that quality goes over quantity. The second point is to make no copy-pasting across sectors, particularly compared with the banking sector. And I have to point out, I think we are all here from the insurance committee. I think we had to get on our feet, as to say, and really fight for this, because there are other in the legislative process, others who in the end do not fully understand, I could say, how the insurance business model works. And so I think we always have to raise this attention that we work different than other markets, other sectors. We have to assure, as a third point, a level playing field between markets and also individual market participants, and to enable insurers to fulfill important roles, or their important role, for positive development of the economy and for the society. For achieving those goals, I'm convinced that a culture of dialogue and exchange of arguments between all stakeholders will be necessary and an important contribution to all of this. Ladies and gentlemen, I wish all of us fruitful discussion during these days here in Romania, in Sinaia, and thank you all for your kind attention.